Gang, it's your boy Nature, aka Nature. Alright, gang, so we back for the next lesson. How to use Fibonacci retracement with Japanese candlesticks. Alright, so we just ran over how to use Fibonacci retracement with trend lines. So now we're going to go over how to use Fibonacci retracement with Japanese candlesticks. Alright, so gang, next lesson, let's start right now. Alright, gang. So how to use Fibonacci retracement with Japanese candlesticks. If you've been paying attention in class, you know by now that you can combine Fibonacci retracement tools with support and resistance levels and also trend lines to create a simple but super awesome trading strategy. But we ain't done yet. In this lesson, we're going to teach you how to combine Fibonacci retracement tools with the knowledge of Japanese candlestick patterns that you learned in grade 2. When combining the Fibonacci retracement tools with candlesticks patterns, we can actually look for exhausting candlesticks. Okay, and exhausting candlesticks are more or have wicks in it. Okay, so if you can tell when buying and selling pressure is exhausted, okay, it can give you a clue when price may be continuing a trend. Exhausted candlesticks have wicks in it. Okay, and you'll see this right now. Here, they call them fib sticks, but Fibonacci candlesticks, they call them fib sticks. Okay, so we're going to be seeing that word a lot. Just stand for Fibonacci candlesticks. It's just called them fib sticks. So below here is a 1 hour chart of a Euro USD. It's in a downtrend. Let's look at this picture. Euro USD on a 1 hour chart is in a downtrend. Okay, currently this is the swing high. So if you want to find a Fibonacci from a downtrend, you sell at the high and you watch it drop to the low. So you want to take the swing high and to the swing low for a downtrend. And price, the theory is that price will retrace once you draw your swing high to swing low, your Fibonacci retracement from the downtrend. For the downtrend, from the swing high to the swing low, the theory is price is going to retrace off of one of these retracement levels, either 23.6, 382, 50, or 6.618 before heading back in our overall direction of the trend, which is a downtrend, which is down. All right, so right now price is currently retracing back at 23.6. Let's see what happens. So the pair seems to have been in a downtrend for the past week, but seems to have paused for a bit right here. Okay, at 23.6, it had paused for a bit. Where there be a chance to get in for this downtrend, you know what this means. It's time to take the Fibonacci retracement tool and get to work. As you can see from the chart, we're setting the swing high at 1.3364 on March 3rd and the swing low at 1.2523 on March 6th. Since it's Friday, you decide to chill out and take a day off early and decide when you want to enter once you see the chart after the weekend. So, by the time you pop open your chart, you see that the Euro USD has shot up quite a bit from Friday's closing price. Okay, so from Friday's closing price, price has shot up a bit. Even it went past the 38.2. It was testing that level, and then it went to the 50, and it started testing that level a little bit, and shot all the way up to 618. 0.618 extension level, and it's a bullish candle. Very bullish candle, meaning that price could continue back up. A very bullish green candle on a 1 hour. So for the hour, when you see a very bullish green candle, this means that buyers are in complete control. When you see a very bullish green candle like this, so this means that on a 1 hour, 4 hour, or even on a daily, this means that buyers are in control, and price can definitely keep heading in that direction, because it's very bullish green candle, very bullish. So while it did test the 50 level and it held for a bit, buyers eventually took the price higher, eventually took the pair higher, and you decided to wait to see whether the 61.8 fib level will hold. Okay, it's at the 61.8. These are strong levels. 61.8, 50 are strong levels where price, even if it's an uptrend or a downtrend, where price will retrace to. Okay, so price retraced back to the 61.8 level. Very bullish candle though, meaning that price could held back up. So it held at the 50, then buyers eventually took the pair higher. You decided to wait to see whether the 61 fib level will hold, or it will, continue heading back up or down. After all, the last candle was pretty bullish, so who knows? Price just might keep shooting up. Okay. So this what happens. Okay, if you're looking to sell, if you're looking to find if you're looking to buy or sell using Fibonacci retracement and Japanese candlesticks, you're going to look for signs of of candles being exhausted. Now, candles being exhausted look like this. They have very long wicks and short bodies. Okay, meaning that buyers are exhausted right now. Okay, meaning that sellers can come in and change the direction of the trend. Okay, so and it's exhausted. It's an exhausted candlestick at the 61.8 level. At the 61.8 level. So most likely prices, it actually forms a doji right smack on the fib level at the 61.8 level. So this means that buyers are exhausted, that sellers could come right in and take over price. So while you see long-legged doji has formed right smack on the 61.8 Fibonacci retracement level, if you pay attention in grade 2, you know that this is an exhausted candle. Has buyers' pressure died down? Has the resistance of the Fibonacci retracement level holding? Is the resistance of the Fibonacci retracement holding? It's possible other traders were buying or were probably eyeing that fib level as well, because 61.8 and 50 level are very high potential support and resistance levels. So it's very common that a lot of sellers or a lot of traders were looking at those fib levels, and that's why that candlestick did form. So it's time to go short. You can never know for sure, which is why risk management is so important though. You never know for sure, but the probability of a reversal looks pretty darn good. So price does reverse, as you can see right here. Price does reverse. Looks like buyers were exhausted. Looks like those red candles, those looks like buyers were exhausted at the 61.8 level, making a double top. Even price starts heading back down. You see these red candles, making red candles, a lot of red candles. Unless you know that red candles mean sellers, green candles mean buyers. So it shot past the 50 level, then the 3.82 level. So if you would have got in right after price made this exhausted candle, you would have got in for a very, very good profit, because price eventually went all the way from 61.8 all the way back to the swing low, eventually reaching the swing low prior, the swing high to the swing low from a downtrend. So if price eventually wanted reaching the swing low again. So if you would have got in for this trade, this would have been a very profitable trade, like 400 or 500 pips. So if you had shortened right after that doji had formed on the 61.8 level, you could have made some serious profit. Right after the doji, price stalled for a bit. It did stall for a bit before it's heading straight down. But take a look at those red candles. It seems that buyers were indeed pretty tired, which allowed sellers to jump back in and take control. Eventually, the price went all the way back down to the swing low. That was a move about 500 pips. That could have been your trade of the year, depending on your on your lot size too. Yeah, that could have been your trade of the year. So looking for Fibonacci candlesticks on Fibonacci retracement levels. If you see candlesticks that are forming exhausted candlesticks on 61.8 or 50 Fibonacci retracement levels, this can be very useful as they can signal whether a Fibonacci retracement level will hold. If it seems that the price is selling on that Fibonacci level, chances are that other traders may have put some orders at those levels too. If it's like consolidating for a little bit, it's meaning that sellers are putting in orders, or other traders are putting orders at those levels, rather it be 61.8 or 50. So this would be as a more of a confirmation that there is indeed some resistance or support at those price levels, because traders are looking at those supports and resistance price levels. So another thing that the Fibonacci retracement candlesticks does is that you don't need to place limit orders at those Fibonacci levels, because the Fibonacci retrace candlesticks are pretty nice. So you may have some concern of whether the support or resistance will hold, since we are not looking at the zones and necessary specific levels. This is where you can use your knowledge of candlestick formations, and you can see it also made like a three black crows formation. You can wait for a Fibonacci. You can use your candlestick knowledge that we go over, and you can wait for a candlestick to form on right below or above the Fibonacci retracement levels to give you more confirmation on whether you should put in order. So look at the candlesticks and everything and all the formations, whether they're making double or triple candlestick patterns, or single candlestick patterns. Look at everything and see to get a better confirmation on whether you should put in an order. So Fibonacci candlesticks does form, and you can just on Fibonacci retracement levels, and you can just enter at the market price, since you have more confirmation after you see the Fibonacci candlesticks patterns that form on those Fibonacci retracement levels. You have more confirmation that those levels could be holding. So in our next lesson, gang, we're going to go over how to use Fibonacci extensions. Fibonacci extension is different than Fibonacci retracement. Fibonacci extension is how we know to take our take profit or to find take profit. Alright, so we're going to go over Fibonacci extension next, gang. Alright, so this is how to use Fibonacci retracement with Japanese candlesticks. Alright, so it's your boy Nature, aka Nature, gang.